Hello, once again. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. I'm going to get right into the stats this week from across the country. If your area isn't in here, it's because they haven't reported yet. Most areas are, but again, if they haven't, it's just because they didn't report their data yet. First, we're going to start off with the number of new listings. Most areas are down. We are at a 20-year low in Canada right now, and I'm going to talk about this later in the video further. Here we are. I've broken them into two areas this week. We have the rest of Canada and we have Ontario, because there's so many areas that they wouldn't all fit properly, and we'd be looking at small little letters and text. The area with the biggest decline in new listings is Calgary year over year from last April, then Fraser Valley, Greater Vancouver. Then you get into Moncton, New Brunswick, Regina, Nova Scotia, Edmonton. Of course, if you notice, my background is from Edmonton. Northern BC, Okanagan, Montreal, Quebec, PEI, and Saskatoon are down the fewest new listings. They're almost even, actually. Not a big change from last year. Moving into Ontario, Kitchener-Waterloo down 50% from last year. So big inventory issues there in Kitchener-Waterloo. Durham region down over 40%. Same with Cambridge, Barrie, Oakville, London, St. Thomas. And again, a lot of areas in that 30 to 40% range. Sudbury, Guelph, GTA, Brantford, Hamilton, Burlington, Niagara, where I am, and the list goes on. The only place that had more listings than last year was Simcoe and District. Moving on to the number of sales. Outside of Ontario, Nova Scotia leads with over 32% or so. Then Edmonton, Okanagan, Northern BC, Quebec, Montreal. The list goes, you can see it there on the left. Vancouver's over 15 to 17% or so. And Fraser Valley's doing the best. Their sales have almost rebounded. They're only 5% lower than they were last April. And in Ontario, almost all areas, the sales are down. North Bay, Sudbury, Renfrew, Brantford, and the smaller kind of outlying areas are leading the declines in sales. And there's a few areas, again, they're smaller populated areas at the bottom that actually have increased their sales. Now moving on to month over month price changes, increases and decreases. Three places actually had declines in the average sale price. Saskatoon, PEI, about 5 to 7% each, and Greater Moncton. Everywhere else had increases month over month. Nova Scotia leading the way with over 10% increase in the average sale price. Then Fraser Valley, Northern BC, Victoria, Edmonton, and then Montreal, Calgary, Quebec, Greater Vancouver, and Regina all had that 2 to 3% range of increases. In Ontario, North Bay actually had a decline. Not a big data set there, so take that with a grain of salt. Most places had that 2 to 4% increase in April. And you can go down the list there. I'm not going to name them all, but you can see them on the left. Peterborough and the Kawarthas had over 10%, 12% month over month. And the Lakelands, they were at 17%. Again, just like North Bay with the declines, the Lakelands, Muskoka, and Bracebridge area, they don't have a big data set. So of course it's dramatically influenced, especially in the spring with all the waterfront properties coming on the market. Now moving on to percent change from the peak. How much have the areas dropped from the peak, or in Calgary's case, they've increased a bit? Anyway, leading the declines is Fraser Valley, just over 20% declines from the peak last year. Moncton, Regina, Interior BC, Okanagan, Victoria, PEI, Northern BC, they're all down just around 10%. And Montreal and Quebec, they're in that 7% range or so. Nova Scotia's around 5% from the peak. Vancouver, only 2.5% or so from the peak, they're down. Greater Edmonton area, 2%, and Calgary is up about 1% or $2,000. We'll see that in the next chart, actually, or a couple of charts from now. In Ontario, Northumberland Hills, they're still down 25, 26%. Cambridge, Southern Georgian Bay, Woodstock, Ingersoll, all down over 20%. Same with Durham region, North Bay, Barrie, Kitchener, Waterloo, all 20% losses. And until you get to Windsor, Essex, London, St. Thomas, they're still 20%. And you get into Niagara, Guelph, Hamilton, Burlington, Grey Bruce, Owen Sound, Simcoe District in the upper teens. Greater Toronto, 14% or so. And as you work your way down, Ottawa's just over 10%. And the Lakelands have fared the best. They're only about 9% or so decline from the peak. Now, looking at the dollar amount of declines from the peak, or in Calgary's case, the increase, Fraser Valley leads the way with over $250,000 loss from the peak. Then dramatically lower is Victoria, just over 100 grand, 75,000 for Okanagan, and less than 50,000 for all the rest of the places, with Edmonton and Calgary suffering the least amount of losses, or in Calgary's case, they're up about $2,000. In Ontario, Southern Georgian Bay, about 275,000. Durham region, 260 to $70,000 losses still from the peak. Cambridge, $260,000 decline. And you can read on down the list. Greater Toronto, not bad considering their price point, about 180 grand from the peak. But everywhere in Ontario is still down from their peak, with the lowest amount being Sudbury, which is about 70,000 or so, which is a lot compared to their price point. So will the prices keep going up, or are they going to change? Is this recession going to hit sooner or later? Hard to say. Recession is coming by the looks of it. There's a lot of stuff in the news, a lot of media reports. Everyone's calling for it, all the big shots, Warren Buffett, everybody. But we'll see, and we expect that market to change at some point. Looking at these charts, these are May 8th when I recorded this video. This is the 20 boards surrounding the GTA. You can see we have started to pull back. Are the tides changing? It's hard to say at this point. It's only May 8th, but the median price shows the same trend. It has started to trend down. Again, still early days in May, but we could see a shift in the tide at this point. So back to this issue of the 20-year low inventory. This is no surprise. It's been reported over the last month or so since the last CREA stats release that we're at a 20-year low for new listings. So why is inventory so low? I say it's because people aren't selling, not because there's not enough inventory or new construction, as people would say. I hear a lot of talk, there's so many new immigrants now, and this is why. Well, there wasn't that many new immigrants back in 2021 and 2022, early 2022. So that kind of doesn't support the theory. So what I've done is I've compared the increase in population, and I've done this before, to the amount of housing completions to say, okay, have we supported over the last 20 years, have we supported the increase in population? So all my data I got from the StatsCan CMHC housing starts or housing completions data. And the increase in population, as you can see here, I got from macrotrends.net. They have some pretty good information on population growth and whatnot on this site. I'll leave the link in the description, but you can see in 2003, it was 31,619,000 in Canada. And in 2022, it was 38,454,000, an increase of 6,835,000 people in that 20-year time frame. With an average household of 2.5 people, we would have needed 2,734,000 units to house these people. Now, taking the total units completed from StatsCan, we actually have 3.5 million, over 3.5 million units completed in that 20-year time frame. So as I've stated in previous videos, we have more than enough houses, plus an additional 20%, actually even more than 20% for investors. But that balance has been severely off in the last 8 years or so due to many reasons, a lot of them government and policy reasons. This is why we've had more investors buying than we have owners. One more chart I want to take a quick look at here. This is the percent of sales by occupancy status. Now, I've just used the Niagara MLS data because there's too much data. They round off to 20,000 once you get too high. So I couldn't use all of the ITSO area that I normally use. It's just too much data on the way it reports it. This data is on sold properties. And when you sell a property as an agent, you have to list the house. Is it owner occupied? Is it vacant? Is it tenanted and whatnot? So we can kind of track to see, okay, what percentage of the listings are owner occupied as compared to vacant or tenanted. So back prior to 2015, you can see that there was more owner occupied properties. It was over 70% on the market, compared to nowadays. In 2022, that ratio or that percentage significantly dropped. You can see it's tightening up. So there's less owner-occupied properties on the market and more vacant/tenanted properties on the market, which would suggest that there's more investors owning these properties, and they're most likely not selling them because they don't have to, whereas traditional owners, they want to move, they will sell. So back to my theory of why there's low inventory, not because there's not enough homes being built or that were built in the last 20 years. It's because owners aren't selling. And there's three main reasons that owners aren't selling their properties. So the first reason is it's just too expensive for traditional sellers to move. they can't move. They don't want to move. They don't want to take out a big mortgage just to upgrade to a new house. So they're sitting pretty and they're staying put. The second reason is the investors and the speculators. They don't want to sell for many reasons. For one, they want to hoard their homes. They want to get as many homes as possible. Another reason would be they don't want to take a loss. They don't want to sell until we're at an all-time high. And they don't have to sell. They can rent the property out and wait it out. A lot of them can wait it out at this point. And which brings us to the last reason, whether you're an owner or an investor or speculator, you're not forced to sell because of rising interest rates and whatnot, because the banks and the lending institutions are literally kicking the can down the road, extending amortizations. So nobody actually is forced to sell, or they won't lose their house to the bank at this point. But I think it's all going to catch up sooner or later, especially when people don't have jobs. And somebody said in the comments they like my line was, it doesn't matter how long your amortization is when you don't have a job. And it's true. Then we will see them forced sales and bank sales and whatnot. But anyway, let me know what you think in the comments. And until next week, I'll see you then.